Hey everyone, and welcome back to Zacchy Crypto Update. If you're holding Coin, or you've been watching its price action, you might be feeling a bit confused, maybe even worried, right now. We've seen a little bounce today, about 5%, which is nice, but let's be real. Looking at the bigger picture, Pi Network's price is still down a massive 79% from its all-time highs. And honestly, there's a lot of noise out there, with some analysts sounding the alarm, suggesting Coin might even be dying. That's a strong claim, and it raises a crucial question for many of you. Is Coin dying, and more importantly, should you be considering selling right now? Today, we're cutting through the noise, getting straight to the point, and I'm going to break down exactly what the data and the market sentiment are telling us about Pi Network. I'll share my analysis, show you my thinking, and help you figure out what this means for your position. No perambulation, just the crypto insights you need, right here, right now. Let's dive straight into the current situation. As of today, May 1st, Pi token is trading around 61 cents. Yes, we've seen that 5% bump in the last 24 hours, which pushed its market cap back over $4 billion. Sounds impressive on paper, but we need context. While that 5% gain is better than many top cryptos did today, the fact remains it's still drastically off its highs. Now, why are some analysts sounding so bearish? Why are they even using words like dying? It comes down to a few critical points that, frankly, are hard to ignore if you're looking at this objectively. Firstly, utility. A cryptocurrency's long-term value is fundamentally tied to what you can do with it, its utility. Right now, many analysts, like Clark on X, point to minimal utility for Coin. If people can't easily use it for transactions or integrate it into apps and services, demand struggles to grow organically. Secondly, and this is a huge one, exchange listings. For a crypto to gain widespread adoption and liquidity, it needs to be easily tradable on major exchanges. The Pi community has long hoped for listings on platforms like Binance, but Binance has, so far, steered clear. This lack of listing on major platforms severely limits access for new buyers and makes it harder for existing holders to trade freely. There were rumors about HTX, but still no official confirmation. This uncertainty dampens investor confidence, no doubt about it. Think about it from a market perspective. Limited places to buy means limited demand pressure pushing the price up. It's basic supply and demand. Thirdly, liquidity. Even where it is traded, the liquidity needs to be robust for healthy price movement. Analysts note a lack of significant liquidity, which can make the price susceptible to larger swings even on relatively small trades. So, we have limited utility, delayed major exchange listings, and liquidity concerns. This combination explains why bearish sentiment is prevalent among some analysts. Analyst Zacchy, for instance, echoed the sentiment that Pi is dying, predicting increased selling activity, especially after breaching certain technical levels like a descending trend line. Looking at the bigger picture, this pattern isn't unique to Pi Network. We often see new coins launch with a lot of initial hype, pushing the price up rapidly. But once that initial excitement fades, if there aren't strong fundamental developments, like increasing utility, major partnerships, or, yes, exchange listings, the price tends to face downward pressure. It's the classic hype dies, fundamentals matter scenario playing out. Another critical factor I look at is speculative activity, particularly in futures markets. Open interest data, which shows the total number of outstanding futures contracts, is a good gauge of conviction among speculative traders about a crypto's short-term direction. Data from CoinAnalyze shows Pi Network's open interest is around $16 million, and frankly, it hasn't shown any meaningful, sustained increase since its launch. This lack of speculative interest suggests that even professional traders aren't showing strong conviction for a significant short-term price rally. My thinking here is that while the recent 5% bounce is a positive micro-movement, it doesn't change the larger structural issues that are creating this bearish sentiment. The factors mentioned, utility, listings, liquidity, and speculative interest, are fundamental drivers of crypto price. When they are lacking, sustained upward movement is incredibly difficult, regardless of small daily gains. Now, let's quickly look at the technical side, because charts can sometimes hint at potential shifts, even if the fundamentals are weak. On the 4-hour charts, Pi Network is clearly under significant bearish pressure, trading within what looks like a descending triangle pattern. This pattern typically suggests weakening demand and often resolves to the downside, potentially targeting levels around 51 cents in this case. However, and this is where it gets slightly mixed, PI is currently teasing a potential breakout attempt above the upper descending trend line of this triangle. It's been rejected there before, but if it can manage a clean break and hold above it, this could signal a potential shift in market structure. For a confirmed bullish momentum shift, we'd really want to see the Relative Strength Index, RSI, break cleanly above 50 and continue climbing. So what does all this mean for you, the holder or potential buyer? The combination of weak fundamentals, utility, listings, liquidity, and a technically bearish pattern, descending triangle, makes the case for caution very strong. This is why some are considering selling. The technical chart does offer a glimmer of hope with the potential breakout tease, but without fundamental improvements, technical breakouts can often be short-lived or fake-outs. My opinion, the risks here are elevated due to the fundamental challenges Pi Network faces regarding widespread utility and exchange access. While a technical bounce is possible, relying solely on that without underlying fundamental strength is speculative. You need to weigh the potential reward of a bounce against the significant risk of further downside if the bearish fundamentals prevail and the technical pattern resolves downwards. Look, navigating the crypto market is tough, and having real-time insights is key. If you found this breakdown helpful and appreciate getting straight to the point analysis like this, please smash that like button. It really helps the channel. And if you're new here, subscribe to Zacchy Crypto Update and hit the notification bell so you don't miss my next urgent analysis. And listen, for even more immediate market insights, direct access to me, and yes, exclusive alerts on opportunities like free airdrops that aren't always possible to cover in a full video, you absolutely need to be in my Telegram group. The community is growing, and the value is incredible. The link to join is right there in the video description below. Don't miss out on those free airdrops. All right. A quick but crucial disclaimer before we wrap up. Please remember, the cryptocurrency market is extremely volatile and risky. The information and opinions shared in this video are for educational and entertainment purposes only. I am not a financial advisor, and this is not financial advice. You should always do your own thorough research and consult with a qualified financial professional before making any investment decisions. Never invest money you cannot afford to lose. So, while Pi Network saw a small gain today, the underlying questions about its utility, exchange listings, and liquidity remain. Keep a close eye on that technical pattern and, more importantly, any fundamental news regarding the network's development and potential listings. It's a fascinating project to watch, but it comes with significant challenges right now. Thanks so much for tuning into Zacchy Crypto Update. Stay safe out there in the markets, and I'll see you in the next video.